All right, welcome back to Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in and wanting to be with us here today. Let's go over these prices because that's really what you're here for, right? You don't want to hear me wax on and wax off. Let's talk about corn, and it's doing a little bit better ever since I sat down. We're still lower on the day by 1 3/4 cents, but we're at 4.87. That's 2 3/4 cents off the lows. Now we're about 3 cents off the lows. We'll take that, right? And a couple cents from the highs of a 5-cent range. 1.5 cents lower. 4.87 1/4 last. That's D's. That's corn. Just off between 1.5 and 2 1/4 cents across the board there. There you go. That's corn. Soybeans, they're lower too by about 5 to 6.5 cents. 5 1/4 cents lower than Nove. 12.71 3/4 is last. We're, I guess, a little closer to the highs than lows, but we've had a 22-cent range. We're about 7 cents away from the highs. That'll give you an idea. We're down 5 1/4 cents. That's Novi beans. 12.71 3/4 is last there. Let's move on to the wheat in Chicago. That's up 6 cents in that D's price. 5.70 3/4 is last, and that is about 5 cents off the highs. All right, not bad. 8 cents off the lows. And if we look to the March, it's up 4 cents, and we've got a 6 in front of it. There you go, $6 even. March wheat in Chicago. All right, that's Chicago wheat. Let's go to Kansas City wheat and see what's going on there. That's the hard red. That's up 7 cents to 6.83 3/4. That's only a penny and a half off the highs. That's not bad. March is up 5 1/4 cents to 6.80. Well, just ticked higher, 6 cents higher, 6.90 and a half, and that's just one tick off the highs. Hard red wheat, Kansas City, making a move as we speak. Spring wheat, Minneapolis, that's up 9 cents to 7.27 3/4. It's a penny and a quarter off the highs there as well. We've had a 14-cent range. That explains it all. D spring wheat, that's up 9 cents, 7.27 3/4. And then finally, let's get to the cotton. What's happening there? That's down 27 points, really kind of quiet there. 87.48 is last, 44 points from the low, and about, 40 points, 36 points from the highs? All right, there you go. Let's bring in our next guest analyst. That's going to be Tommy Grisafi with Advanced Trading, and I believe he's in Valparaiso, Indiana. There he is. All right, Tommy, you heard me rattle off those numbers. You talking to your producers out there? What's going on?
Well, there's something huge happening in the financial markets that the producer probably has no idea of right now because they're so busy with harvest. Some people are receiving rain. Some people are full-blown going with harvest. So what happened today, and I have the red phone here, what happened today is the bond market sent a signal to all the other markets in the world that it's game on. And you talk about this a lot on the show and Scott the Cow Guy close, but the bond market just made new high yields. And you got this one crowd running around saying, I farmed in the 80s and we had much higher interest rates. Sure, with your $100,000 operating note. I don't have a client who probably has under $1 million operating note. So something huge happened. The bond market is on the lows. The stock market looked over and said, hold my beer. The cattle market said, oh, that's going to leave a mark. If I didn't know better, and we're going to save this video and watch it in a year, if I didn't know better, the markets are actually going from pricing in wild inflation to, I think, huge hedge funds are actually putting on the deflation trade, that our government raised interest rates so much, so hard, and kept them there for so long, and it had such a lagging effect that the consumer is absolutely maxed out. People aren't buying new vehicles. Everything's through the roof, and that we go from super high prices to deflation. And if that happens, that is a horrible situation if you are someone who grows commodities, which a large percentage of your listeners and viewers are actually people who raise commodities. I'm going to flip it back to you and say, is it possible? We just went from 2-3 years of rampant inflation to hitting the brakes to deflation all in a couple months. Is that possible, Scott?
Yeah, absolutely is. And there are some deflationary pressures out there already. And what needs to be kind of highlighted here is the definitions, because we talk about CPI, the Consumer Price Index, and the Producer Price Index, and those types of things is what the mainstream media looks at as far as inflation indicators. And you've seen the CPI move from 9.1 down to 3, and then now back up to 3.7. But as long as those are still positive numbers, that means your prices are still rising. Okay, so when you see CPI or inflation come from 9 down to 6 and down to 3, that's called disinflation. That's still not deflationary because prices are still rising, but at a slower pace. What you're talking about is actually prices going down. So that needs to be, you need to see a negative in front of those numbers for that to happen. And there are some factors out there that could be pointing that way, because we've got some problems on the horizon, and you've highlighted them all. And the one that's really yanking everybody around, the big story, is obviously that 10-year yield getting up to 4.7%. That's pushing those operating loans over 10% and those mortgages over 8%, or at least that will be the stimulus. So we got to go away to take a quick break, but I'm going to continue with that tone because it's affecting these livestock markets too. That's Tommy Grisafi. Stay right there, Tom. We're going to go away. We're going to pay some bills. We're going to come back and talk right after this. All right, welcome back. We're going to see just how much interest rates affect everything. Why don't we start with the live cattle and see what's going on there? And that's $2 lower now, $2.05 lower. Chicago live cattle boards at 182.37 in the October price, and that's 30 cents off of the lows. Deese is down $2.62 to 185.72. Here's where things get ugly. Hold your nose and turn your head. $4.65 lower. And Oct feeders, 248.67. But look at Nove right behind it. That's off $5.10. Ouch. Now $5.15. 250.55 is last. But look, there's still room for us to go lower. We have been a whole 90 cents lower than this. So that's going to tell you that, hey, this market does not like higher interest rates, because that's going to hurt the consumer, who arguably is already hurt. Consumers on fumes. All right, this is lean hogs. We do have a higher board in October, up 20 cents. 80.05, but the Deese is down $1.05 to 68.47, and that brings us back to Tommy Grisafi, Advanced Trading in Valparaiso, Indiana. Tommy, yeah, those cattle markets ugly.
Right, and everyone's looking for the blow-off top in cattle. I think we've had a 3-month blow-off top of continually going from the bottom left to the right. Now, a week ago when I was on the show, I said, the cattle market had a bad day, but if you look at a chart, it just looks like this much. That line's getting a little bigger. And as we come into the end of Q4, or the beginning of Q4, as we come into the end of the year, you have to ask yourself, do people really want to be mega bullish cattle if we're having economic turmoil? Now, we're going through this 45-day period of keeping the government open. There's some political things happening in Washington. There always is, right? That's Washington. That's really affecting things. And I feel the overall tone of the consumer has changed. I personally know what it's like to try to pay some bills with kids in college and everything else. It's expensive to live in America at the level you do, Scotty.
Not me. It's the ones we go away to commercial breaks so we can pay for Tammy, not me. But that's a whole nother story.
She is the star.
But exactly right. I'm just a bouncer. I'm her people. But you're right. When we see these things, 20% year over year, in the last 2 years, we've seen inflation go up. That's a lot for everybody. But I could argue that it's actually more than that. And so now with these 10-year yield going up to, it's like 4.7% today. Folks, that's pushing these mortgages up to 8%. How are we going to get young kids like in your family on the property ladder when they have to take out an 8% mortgage? Now, yes, like you said, have people seen rates a lot higher in the past? Yeah, but we didn't come from zero, and we didn't come from 15 years of zero. That's the key to this whole thing. 15 years of zero rates, suddenly now at 5 to 5.5. That's going to leave a mark. Consumers, small businesses are not built for that. All right, Tommy, thank you very much for being on the show. Tommy Grisafi, he's with Advanced Trading in Valparaiso, Indiana. We'll bring it back here to the expensive Tammy.
You are so wrong, and you know it.